Hey guys, hope you are all having a great day. Today markets further the losses as the weight of uncertainty surrounding the situation in Ukraine weighed deeply on investors. GameStop and AMC didn't release any news related to their business, so we will instead talk about overall market conditions, the growing disparity in confidence that is growing within the media itself, and we are actually going to theorize as to what a Russian invasion could mean for the ordinary lives of us. This morning, I released a very important video talking broadly about modern monetary theory, which is the fundamental problem that has led inflation to be where it is and the economy to be so serving to the 1%. It is a very wrinkly video and one that you must watch if you want a real understanding of everything going on today. I will link that video in a pinned comment below along with my Discord so you can come over if you want. It's free and open for everyone, like my ex. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with the stock market. Stocks fell as investors eyeing the escalating Russian threat remained concerned over what it will mean for the stock market. Inflation and the soon-to-be aggressive policy tightening by the Federal Reserve also weighed heavily on investors. Personally, I was looking for stocks to trade today, and all movers had very little retail participation. Most of what I saw was because of bots trading against each other. It was very apparent today that more investors than on average decided to take the day off and just watch from the sidelines. The S&P 500 ended the day in the red, further extending the losses it suffered last week, especially during Thursday and Friday after that brutal report that inflation rose to 7.5%. Oil prices rose back up after recent run-ups in Russia and Ukraine tensions rise possibility for prices to explode. With oil prices elevating, the S&P 500 energy sector has far outperformed other major S&P 500 sectors for the year to date, climbing more than 256% versus the broader market's 7% drop. For those wondering why, just think to economic basics, supply and demand. How much supply can actually be impacted by a potential invasion? Estimates suggest that crude oil could rise to $120 per barrel, while others have a more conservative estimate of $100 a barrel because they don't think potential sanctions would be too strong. The second major thing that you guys need to know is that the reason why current geopolitical problems between Ukraine and Russia are weighted so steep on our markets is because the biggest stocks are in tech, and because a lot of the components used in microchips derived from materials that are exported from Russia. There is a serious possibility that if war breaks out, shortages will compound further than they already have. The Fed's poor track record is coming back to bite them, as even the corporate media is beginning to jump on the accountability bandwagon. I saw various corporate media outlets from CNBC and CNN talking about how the Fed's credibility is on the line with the looming front-load rate hikes. We had some serious comments from the St. Louis Federal Reserve President James Bullard, who made his case on the rapid interest rates. He said he thinks we need to front-load more of our planned removal of accommodation that we would have previously, as he has been surprised by the amount of inflation on the upside. It was the next comments he made following up on that made me garner a bit of respect for the man. He said, "Our credibility is on the line here and we do have to react to the data. However, I do think we can do in a way that's organized and not disruptive to markets." Hearing the word accountable from someone in an important position slapped me in the face pretty hard, as I may have forgotten what it was like to have a public official talk about anything that has to do with a modicum of morality and goodwill. Bullard had mentioned the Fed should raise its benchmark short-term borrowing rate to a full percentage point by July, which sent stocks on a volatile ride and caused futures markets to price in as many as 7/4 percentage points. It must be reminded every day that inflation is and will continue broadening in the US economy. Acceleration of our economic demise strengthened by the day, and even with strong inflation gains, real incomes have been declining as inflation is outpacing the rise in average hourly earnings, which was already too small to begin with. Bullard himself said the inflation we are seeing is very bad for low and moderate income households, and people are unhappy with consumer confidence declining. The Fed needs to reassure people that they are going to defend their inflation targets if they are set on scaling it back to around 2%, but Jerome Powell's attitude and competency, along with possible bias, is the main frustrating impediment to reaching decisive correction. Lastly, I want to talk about what it would mean for us if Russia decides to invade Ukraine. An invasion of this magnitude would easily disrupt supplies of crude, which will lead to prices even higher levels than they already are, which we just briefly spoke about. In my opinion, I think it very likely that crude oil goes above $100 per barrel sooner than projected. These prices will solely depend on the sanctions that the United States and its allies will impose on Russia if they are the ones to launch a full-scale attack. Spiked in energy will deeply hurt consumers and prompt central banks around the globe to move more quickly to raise interest rates to try to tamp inflation. This alone is going to send all stocks in a ruckus, and I mean well beyond market correction levels. Depending on the severity of how things take place, we could see a massive fall like the one we saw in 2020, or we could actually see a full immediate recession. I must press again that I am not an intelligence official and cannot say what Russian aggression is limited to. If they go full out in war, this means global markets all crumble. If it's just missile attacks for a couple days, experts suggest we could go slightly below market correction territory, but not by far. Capital economics analysts said a Russian invasion of Ukraine could add as much as 2 percentage points to inflation, particularly in Europe. Markets have reacted negatively to the news of potential war, with many people saying it's all being over-dramatized for the sake of media sensationalism, which I do in part believe it as well. However, if things really do get ugly, markets will not ignore the headlines for one simple reason: oil. The last major military conflict studied to great length was the 1990 war following the invasion of Kuwait by Saddam Hussein's Iraq, which led to a broad market shock. The S&P 500 plunged 17% during the start of the war and took more than half a year to recoup its losses. Given that Russia is a major oil and grain supplier, fears of price rises are very, very real, which is why we have seen many investors jumping on oil stocks in large drives during the last week and today. Again, this is a worst-case scenario. I want to give you guys the tools and foundation for what to expect based on real-time data and analysis. I think this will end without a drop of blood from either side, which is a good thing. I have seen some GME and AMC investors hyping up a war so that markets crash and they can get paid, and I cannot for the life in me understand the selfishness and pure lack of morality that comes with wishing death upon millions of strangers just so you can get paid. Some people just need to get bullied these days, but I won't say too much on that as I will get cancelled by them. Let's now talk about today. The Fed submitted over $1.666 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 52% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 5% for the day. It opened to a rather bullish performance during its pre-market run. Upon market opening, there was a lot of volatility, driving the price between 18.40 and 19.20 for the most part. As AMC began to stabilize, it quickly fell under the VWAP and began breaking support, eventually reaching 17.66 as the lowest point. After a small bounce, AMC managed to close at 17.75, below the VWAP. As for tomorrow, AMC will find support at 17.50, 16.80 and 16. Resistance will be met at 18.22, 19.23 and 19.66. What happens tomorrow will be based on market conditions. I just hope that the support we have built is enough to keep it a bit elevated for a while. AMC is way oversold right now. GameStop traded bearishly, losing over 5% for the day. Upon market opening, GameStop began breaking support, testing 117.34 before bouncing back up to try to break above the VWAP. When it failed to break above it, it dipped yet again, this time falling back down to 116.15, the lowest point of the day. After a small bounce, GameStop closed at 117.09, below the VWAP. As for tomorrow, support will be met at 115, 110 and 108. Resistance will be met at 120, 123 and 125. Tomorrow's run will be mostly dictated by overall markets. GME is way oversold as it is right now, so hopefully we get to see it move upwards. And that is all I have for you guys today. Check out this morning's video if you missed it and remember to come join our Discord. I added some cool stuff to it this weekend. Let me know what you thought of the video down in the comments as well. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.